welcome to everyone who's joining. I can't see how many viewers there are. Interesting. So, hold on. All right. 14. Fantastic. Well, Charles, thank you so much for joining. We're very happy to be here. We're going to wait until just another few minutes to get started. We've got some people who are, we know, very excited to come right at 6 o'clock. So we'll just be waiting a few moments for everyone who's here. But welcome to those that are here so far. We're very happy to have you. How are you, Charles?
Very good, very good. I think we're all looking forward to the ETH London hard fork later today. You've chosen a great time to host a webinar, Hayden.
Do you think we're going back to 3,000?
I mean, look, I take the opposite view, right? So I can see that a lot of people in the chat are quite bullish and they're huddling it to the moon.
Yeah.
But I just think that in the short term, at least, I think we are overdue a correction. There's been a lot of hype and a lot of coverage in mainstream media because of VIP 1559. So yeah, my money's on it. Correcting after was it like 8:30 p.m. today? Once we've got fork out of the way.
Yeah.
But yeah, it takes two sides to make a market. Everyone's long, I'm short. So hey.
Fantastic. Well, I'm not sure what I think, but let's jump into the program for the evening. That's probably a good place to get started. So to everyone who's here, welcome. Thank you so much for joining. We're joined, my name is Hayden Hughes. I'm the CEO and co-founder of Alpha Impact. And we're joined by Charles, who is the Chief Investment Officer at Basis Capital. So hello, Charles, officially. Hello again. Great to have you here.
Oh, thanks very much. Thanks for having me.
Fantastic. And for anyone who is watching, the QR code at the top, it's here. Sorry. This QR code leads to the Alpha Impact website. So if anyone's curious to get to know Alpha Impact, you're welcome to check out our website there. So the format for the evening, everyone, thank you so much for joining. Looks like there's some very bullish folks on Ethereum here. I'm sure we've got at least one who's on the other side of that trade, who's Charles. The format for the evening, we're going to be having, it's interactive, but Charles and I are going to be both moderating and asking each other questions. So I'm going to have some questions for Charles. Charles is going to have some questions for me. We're going to be starting those questions where we start having a conversation with each other in a moment. We have a couple questions to cover off. We're going to go until about 6:40, and then we're going to open the floor. Frostek, hello, welcome. We're going to open the floor at around 6:40, which is 38 minutes from now, for Q&A. So if you do have any questions, feel free to jump in the comments. We're happy to try to take the questions as we go, but we might just push on until the end. So without further ado, let's jump into it. So Charles, I know that there's probably lots of people here who are interested to get to know how you started in crypto. What was your journey? How did you get into crypto in the first place?
Sure. So just a quick background on myself. I mean, I come from a traditional finance background. I studied economics and finance at university, and I spent basically my whole professional career in fund advisory and fund management. And my last job in sort of big corporate was at a firm called Cantor Fitzgerald, and I was a investment trust analyst there. So I moved back to Singapore a couple of years ago, got involved in a couple of startups, and about a year ago, just made the transition into full-time crypto arbitrage trading. Really because, yeah, like I was playing a bit of poker at the time. I got to know quite a lot of crypto guys on the circuit. As it turns out, crypto people love gambling. Who knew, right?
Who would have thought?
So yeah, we talk about a lot of stuff over the poker table, and they're all encouraging me to buy some Bitcoin. I told them that I wasn't that gutsy, which of course, in hindsight, maybe I should have just put a little bit of money in. Yeah, like they said, okay, fine. Why don't you try the arbitrage trade then? It got me started on a sort of journey of sort of just like research as I love doing. And when I realized that it was the real deal and that you could actually make some decent returns in a relatively risk-free format, that's when I started deploying more and more substantial amounts of what I had saved up into this trade. And so it got to a point where I was able to sort of put food on the table and not need to go into the office. And that's when I just said, look, I'm going to do this full time. Like I don't need to do anything else. How about yourself, Hayden? I mean, like you've been in the crypto space for far a longer time than I have. I believe. Like, how did you get started?
Yeah, so my background, I'm actually a lawyer by training, and at some point through my journey, decided I didn't actually want to be miserable and practice law. So no offense to any of our lawyer friends or our lawyer, who I think might be on the call. So finishing law school, went into venture capital, and was actually working on a transaction that was quite small in comparison, and found out that some people in crypto were doing this massive transaction that they'd done in 6 minutes on a public sale in Japan. And I thought, well, if I'm working on something that's this big and it's taking me, months and months, and then someone can come along and do one of these in just a few minutes, crypto might be interesting. So I was headhunted to join an investment bank called Techemy. So we were doing capital raising. It's a regulated investment bank focused on capital raising for cryptocurrency projects. We raised several $100 million in 2017 and 18. They sent me to Singapore. Ended up leaving that firm and joining Crypto.com, working on their institutional sales team, and then started Alpha Impact, which is a social media network for crypto traders and crypto enthusiasts, people who want to learn crypto trading, last year. So it's been I guess a 4-year journey. I've seen, when I joined in 2017, everything was just going up 20% every single day. That continued for quite a while in 2017, and then there was I guess a 2.5 to 3 year bear market. Through that time, saw a whole lot of growth, and now we're right through the other side in another kind of bull cycle, lots of green candles. So that's been my experience so far.
Cool. So I mean, obviously you've been in the industry for a bit longer than I have, but what would you say to people, or what should they know if they want to get started investing in crypto like today?
Yeah, it's very noisy. And so what I mean by that is that there are a lot of headlines. And because this is a part of the world and of finance that's just growing and it's very poorly understood, there's a lot of folks who don't quite understand it. There's a lot of regulators, there's a lot of laws, there's a lot of bad characters, there's a lot of good. It's very hard to discern, truth from fiction. And so the idea that I've always had is that I need to have my own view, and I need to be in a position where I have enough information. And it's very hard to do that because there's all these different sources of information. So this is one of the reasons we started Alpha Impact. But I think it's very important to understand that most cryptocurrencies are different to Bitcoin. So I'll talk about Bitcoin a little bit. Bitcoin is a scarce commodity. There will only ever be 21 million Bitcoins. It's not like it was designed to be different to traditional currencies. In the traditional monetary system, central banks can just print more money to, the thinking goes, to stimulate economic growth. Bitcoin's a little bit different. It has a kind of a capped supply, if you can imagine it looking like that. And so it's a scarce good. And that's why Citibank and other analysts have come out and said this Bitcoin thing, so to speak, looks a lot like gold did in the 1960s when it was developing a place in a diversified portfolio. So it's a scarce good. If you zoom out and look at Bitcoin, ownership of Bitcoin in a 3-year, 4-year, 5-year time frame, the line just goes up and to the right. However, if you zoom in and you look at a 1-year time frame or a 2-year time frame, or even a 2.5-year time frame, it can be very volatile. So that volatility you get paid for if you can stick around for long enough. But it is a volatile space. There's lots of headlines, and it's an exciting place. The returns are good, but you have to be very measured in the way that you think about it, because you're talking about something that can go up 8,000% and then drop 90%. So it is a bit of a different investing style than other assets. And I wanted to also ask Charles, since we've got you here. So you've built a bit of a and by the way, just before I ask you, Charles, I just want to say hello and welcome everyone in the audience. Boris, Ariel, Vin, Michael, Frostek, Amanda, I think Ariel, I already said, Rahul, and Matthias. Great to see you and everyone else. So Charles, how do you find opportunities in the crypto space in terms of investing? How have you kind of built your investing thesis, and how do you manage risk?
Sure. So I think I think it might take quite a long time if you want to go through everything. But just in a nutshell, I think it's just the sort of age-old adage of do your own research. Like you just have to spend a bit of time going through all the different informational sources. The thing about crypto is that it's a little bit different from everything else. I feel. Obviously having friends in the crypto space helps. As I mentioned, I got to know quite a few of them playing poker, and it helps to just bounce ideas off a couple of them. The other thing is that quite a lot of the information for crypto actually resides on Twitter, which is something that I wasn't very used to. I didn't use Twitter, and I didn't use Twitter until I actually started getting into crypto. And then, of course, there's increasingly more and more of these sort of podcasts and sort of blogs and stuff. But I think you have to be quite selective about those, because there are a lot of people who are just shilling their own projects or bags that they have an interest in. But ultimately, it's just like anything else, just like stocks. You have to do your own research, and you just have to put in the time. In terms of managing risks, once again, I think it's just a very common sense approach to things. Trade only on exchanges which are big and well known and well capitalized, and which you trust. Avoid the small dodgy one in I don't know, the Cayman Islands or something, which you may or may not get your money back from. Like ultimately diversify, and just always know where your stop loss is. Know where you're gonna cut your losses if any. It's basically just don't do anything crazy.
Yeah, and I think it's worth. I'll put this in the form of a question, Charles. I've seen a number of platforms, and they've said guaranteed return. You just have to invest, and you get 20%, 50%, 100% guaranteed. What's your view of those? If you were to come across, now that you're in the industry, if you were to come across an offer like that, what would your if people in our audience come across offers like that, cryptocurrency, invest, guaranteed return, what would your message be to the people in the audience who are maybe asking you about these types of investment schemes?
Yeah, so I maybe it's because of my training as an analyst, but I always view these things very, very skeptically. I feel like I never like the word guaranteed, because it's usually it's usually quite couched in some other. There's always like fine print, isn't there? But I think for those of us here in Singapore, we're quite aware of what happened in recent months. There was a sort of investment scheme called Torque, which went belly up. It had a crypto banner, but I think upon reflection, it looked a little bit more shady than that. But yeah, let's not speculate. But yeah, I feel that even with those caveats, you have to do your own research before you put any money in. But I do think that there are ways to generate returns in the crypto space, which are quite attractive and relatively low risk. But I'm sure we'll cover those in more detail later on in this conversation.
Sure. So, here's an interesting question, Charles. Is it better to invest in crypto rather than stocks?
I think the politically correct answer to that is that there's a space for everything in a well-diversified portfolio, right? So I would never put anyone off investing in stocks. I would never put anyone off investing in crypto. I just think it needs to be well balanced and well thought out, and like everything else, if you're just going to throw money in without doing any research or taking time to understand what it actually is, you're probably going to lose it. And if you make money, great, but that's just luck. That's not investing. So yeah, I mean, that's what I would say is that in my own personal experience, it has been better to invest in crypto than stocks. The strategy which I run, at least, for example, in terms of arbitrage, like I could not do in the traditional finance markets. So the arbitrage consists of basically trying to take advantage of price differences. And in the traditional markets, like the competition is just too high. So I'm trying to do the same trade, which thousands of other hedge funds, much better resource than I am, are doing as well. So like in the traditional finance markets, I have no edge. In crypto, it's still a fairly new, nascent market, and so yeah, I can get away with making a fairly decent profit margin on these arbitrage trades, and I can still make a pretty decent living as an arbitrage trader.
Yeah, and if I can kind of double click on that, so my personal thesis is similar to yours, Charles. I think I have some stocks somewhere, but it's certainly not as exciting and not a big part of my portfolio. Can I ask, and if you don't want to say, you don't have to, but can I ask what proportion of your capital is in crypto versus non-crypto stuff?
So before the beginning of this year, I would say probably 80-90% of whatever liquid net wealth I had were probably in things like REITs. So this really, really boring stuff. I think it tells you what kind of investor I am. We're talking about stuff. So I mean, I spent some time in the UK, so a lot of my stuff is actually still in an ISA somewhere in the UK. But we're talking about things like social housing REITs. Where the rent is paid by the government effectively. So it's like a pseudo government bond that pays 6-7% per annum. And you're not going to throw low income people out into the street. So the government always pays the rent. So yeah, like before this year, before the beginning of this year, it was substantially in those kinds of investments. And then once things started to take off, once it started becoming quite apparent to me, and I think everyone else around me in the crypto space, that this PayPal announcement was serious, and all the other firms were sort of jumping on board. I then switched, like something just flipped, right? And so I would say that now it's probably in the other direction. I would say about 80% of my liquid net wealth is invested in crypto.
Yeah, same for me. Different backstory with these REITs. I try to avoid. I had a lot in stocks, and then at some point in 2017, I realized that if I had a long enough term view, so what actually happened for me, I bought a whole lot of Bitcoin, including right up until the very top in 2017, and I actually made a decision. If I believe in this crypto as a thesis, I need to ignore the short term and focus only on the long term. And if you zoom out and look on a long term time horizon, it's very positive. And so I heavily started going into crypto. So I'm probably somewhere around 75 or 80% in crypto now. And it's, Charles, this won't be a surprise or news to you, but in our industry, most people are actually 99 or 100% crypto, and they look at non-crypto being a little bit suspect. Or something that's a bad idea. So we're actually the conservative ones in our industry, which I always think is funny.
Yeah, so I mean, I get laughed at a lot of the time because I trade arbitrage, right? So like, I would say I'm kind of in the crypto space, but because I'm not long only, so it makes me a little bit like the laughing stock of the crypto space. Yeah.
Yeah, because I mean So let's double click on that a little bit. So you've talked a lot about this arbitrage trade. How I mean, for perhaps for folks who don't have the same level of understanding as you and I, um, how do you invest in crypto in a low risk way? Because I'm sure there's a lot of people hearing this that are hearing you use these terms, low risk or risk neutral or no risk. Um, and I think for a lot of people, they might not understand what that actually means, because when we think about, in the traditional sense of a no risk investment, that would be a government bond, and not just any government bond, but a United States government bond. So can you maybe talk through a little bit what you mean by that term, low risk, and then specifically how investors can do this in crypto?
Sure. So let me just start off by caveating that nothing in life is risk free, right? Even that government bond. I mean, there's a tail risk that something could blow up and they print too much money and it becomes worthless. I mean, yeah, it's like anything can happen. I could get hit by a bus when I cross the street. It's tail risk, right? So let me just start by saying that nothing is risk-free, and in crypto especially, you do have to be very careful. That said, in terms of the actual arbitrage trade strategy itself, I mean, it's really not rocket science. I've not discovered something amazing and new. It's a very simple concept, right? If you have a product and it's trading on market A at X and it's trading on market B at X plus 1, you could just buy in A and sell it on B and pocket that difference. And so, provided that transaction costs aren't too high and you're not holding it on your balance sheet for too long, then there's a reasonable chance that you'll make money by making that trade, which we simply call an arbitrage. In the traditional markets, you could say, for example, I mean, I think the most so straightforward example would be, say, in the commodity space, like there's a very well-known concept called the cash and carry trade, where you can, for example, buy crude oil in the spot market today, and you can sell it on the futures market, say, like 3 months from now. And if, for example, like a barrel of crude oil costs $30 today, and it's priced at $35 3 months from now, you're guaranteed to make $5 essentially, as long as you're able to hold it and store it. And so, provided that the cost of storage and all that, like everything, all of that just works out. Like you can do the sums after taking away all the costs. If $35 is more than what it costs you, then great, it's an arbitrage. It's guaranteed money. You just need to buy it, hold it, and sell it because you've locked in the price already. And that's exactly what we do in crypto as well, except that we don't have barrels of oil that we need to store. Everything's digital. We're just taking advantage of the sort of differences in various markets. So the trade that I do is one where we do spot futures arbitrage, which is very, very simple. I mean, like essentially you've got a spot market, as I said, you've got a futures market, and for reasons which we can go into, but it might take a bit of time. These markets tend to trade at significant dislocations, right? So like the futures market tends to trade at a significant premium to the spot market, and that's just what I do all day. Like you just buy in the spot market, you sell it in the futures market, and you hold it, and yeah, the money just trickles in.
And so you've talked a little bit about a guaranteed, well, if this trade follows through, as it has been, of course, and this is what you do at Basis Capital, which we'll talk about later. But you've talked about the upside. So you buy here and you sell here, and there's a fixed piece. Mm-hmm. Can you talk us through the downside a little bit? Talk us through a nightmare scenario. What is the worst that could happen in this trading strategy compared to, for me, if I just go and buy crypto, perhaps for Canny Lee, who's 125% long on crypto?
Good old Kenny. Yes,
Yeah.
I believe Kenny is 200% crypto, actually, if I'm not wrong. I think he's mortgaged his house to actually put more money into Solana. But
I think it's doing well so far. So
but yeah, sorry. So what could go wrong? So like I said, there's nothing in life that's risk free. Of course, the way that we're positioned on this trade is that you're long on one asset and you're short on the other. And so at all times, because of the arbitrage potential, these two prices should not move very far away from one another. If one deviates too much from the other, actors like myself, people like myself who want to take advantage of the difference should come in and start pushing it back toward parity. But so yeah, I mean, like it is entirely possible that possible but not probable that because I'm long the spot market and I'm short the futures market, that for example, if I'm doing this arbitrage trade on Bitcoin, if the Bitcoin price crashed while Bitcoin futures skyrocketed, I don't know why that would happen, but okay, if that's what happened in that split second or in that split minute, yeah, you could be liquidated. Your position could be unwound forcibly against your will. And I think the other major risk to sort of highlight is that you are trading on these cryptocurrency exchanges, and so it's something that you need to be aware of because obviously we've heard of exchange hacks before, and so you could see a scenario in which the exchange gets compromised in some way, or which results in the loss of the money that you've deposited on the exchange. So just like with anything else, only play with money that you can afford to lose, and yeah, don't go crazy. Yeah, so I mean, I feel like I've been talking for a bit long. What could I ask you a question, Hayden? I mean, like, did I obviously do a fair bit of trading. This was the arbitrage thing, but do you think buying and holding is a relatively good strategy in crypto?
Well, great question. And Charles, before we answer, I just want to acknowledge we've got some great comments from our friends. So George or Jorge, Ethan, and looks like Kenny didn't have a question, just statement. We've seen some great questions here. We're going to get to those in the Q&A section, which is coming up in just a few minutes. So, but thank you guys so much for your questions. And if anyone else in the audience has questions, we're going to be actually choosing questions from the list of questions that are coming in here on YouTube or on LinkedIn. So just let us know if you have further questions for Charles or for myself. So I think, and Charles, I'll give you a kind of preliminary answer. And if you want to follow up and ask me more stuff, I'm very interested in what you do, and I think the viewers are interested as well. But I don't want to just make it about, I don't want to put you on the spot the whole time. So feel free to dive in deeper or ask me more stuff after I kind of go with this. So yeah, buying and holding, I think it's very important to understand the drivers of cryptocurrency prices. Bitcoin, as I mentioned, is a scarce asset. The role of Bitcoin in any portfolio, there's two ways to think about investing in crypto. There's a thesis-driven view, and when you're investing in something with a thesis, you actually ignore the short term and you say, okay, this is something I want to hold for a very long time. And this is how Warren Buffett invests. This is how value investors, they find a company and they say, okay, well, this company is a great company. It's doing great things. It's affected by stuff that's not, doesn't have anything to do with the company. And we're just going to buy it because it's a great company to hold. And Warren Buffett is a famous investor and one of the richest people in the world because of this. So I think it's important to distinguish between having something that you're trading, which is, Charles, you mentioned you're short. You have a view in the short term that asset prices will decrease. I'm a little bit with you on that and a little bit on the opposite side. In fact, probably both. But I think in the long term, my core belief and something that has been very positive, and for me over the last few years, is that Bitcoin, because it's a scarce asset, because it can't be put back in the bottle, so to speak, and because it's just something that is so well known, it tends to be decorrelative to other assets. It tends to do, it has been a little bit more correlated to stocks than other things, but it's had a great place in my portfolio. And so over the long run, it tends to go up over time. Just let me say something to people in the office. I just need to send a quick message on WhatsApp.
Sure. Should I answer a couple of questions? Because I think that there are a couple that have come in, which I feel are quite pertinent.
Yeah, sure. You can choose, Charles.
So I mean, like, I think Ethan fired across quite a few questions, which I'll just sort of take all in one go. In terms of the sort of sustainability of the arbitrage opportunity, I do think it will continue in the sort of medium to the short to medium term. It's really there because of a market inefficiency, and I'm not too concerned about algorithms. I mean, I use algos myself. I don't execute my trades manually. I used to until I realized how much I was actually losing by not putting through my trades programmatically. But in terms of the arbitrage opportunity, it's really just because the market's inefficient. There's a lot of retail money in this space, still is. And for this opportunity to completely disappear, it would have to, we need to see like a huge institutional sort of buy-in in the same way that we currently have in traditional financial markets with tens of thousands of hedge funds all around the world with trillions of dollars at their disposal. That's what we need to get to in crypto for the space to be completely so efficient that these arbitrages no longer become profitable. So yeah, I still take a fairly bullish view on the profitability of arbitrage opportunities going on. I mean, if you compare today to where we were, say, like 2 or 3 years ago, even the arbitrage opportunities back then were far more lucrative. But of course, the volumes just weren't there. So like I think what we see today is that where the profit margins are perhaps smaller, but the volumes are so much larger, and so like I can deploy a lot more capital, stuff that I could never do 3 years ago. And let's see, in terms of Boris's question about how do I build the volume enough to get the fees low enough? Well, it's quite simple. I don't. You just use FTX. Sorry, just gonna show that there. So that sort of answers Jorge's question as well about what exchange I primarily use. I use FTX, and simply because I get a great user experience, but most importantly, the fees are just the lowest by far from what I've seen in terms of the market. So when you use what I believe is the best exchange out there, you don't need to worry about building the volume to a point where you're a whale in order to enjoy those low fees. And yeah, I mean, you're absolutely right. The low fees are absolutely crucial to this trade, because you are taking very, very small arbitrage profits, so you don't you can't be paying like 0.2% per trade, which you would if you were trading on some of the other exchanges.
Yeah, and if you don't mind, Charles, I'd like to jump in and take Vivek's question. So he's asked, and I know there's people on LinkedIn who can't see YouTube and vice versa, so I'll just read the question out. So Vivek asks, Binance and BlockFi have recently been investigated by regulators in some instances, and in some instances stopped trading. What, in your opinion, is a safe exchange, and which exchange do you use? So I think, Charles, you've talked about FTX. I want to give a bit more color on the kind of big picture. So Binance, it's true, has been in the news lately, having been accused of not complying with laws in some countries. BlockFi is a little bit different because, I know Rishi and several of the team members at BlockFi. I got to know actually quite a few of them last year over a number of calls. I have to say, and I don't think it's a secret, that if they haven't done an IPO, they're moving towards it. So I would be very comfortable using BlockFi. It's not a platform that I use because I do the basis trade and I don't need to give my assets to someone else to make a low percentage. I can make a higher percentage, but on FTX. But Vivek, I think BlockFi has been what we've seen is that I think it was New Jersey. They were the first state that came after BlockFi, and then there were a few other states that kind of latched on. And an interesting exercise that I always like to do in these situations where you have, at least in the US, where you have one state do something and then other states do identical things. Look at those other states and see if there's a governor's election, a gubernatorial election happening in 2022, because the most likely candidate for governor in many cases in the United States is, guess what, the district attorney for that state. So there is every reason for a district attorney, and I hate to say it, but hey, district attorneys are, or attorneys general, sorry, in these states are politically elected positions. So that's just a bit of background. To answer your question, Vivek, Charles has talked about FTX. It's an excellent exchange, probably the most popular among traders in the space. For the hardcore, most compliant, least likely to ever be in the news for having done anything bad, all of the American exchanges tend to be excellent. They don't have the functionalities that Charles and I would look for in terms of margin and futures and all kinds of different derivatives. And Charles, feel free to jump in if you think I'm right or wrong. But I would say the absolute most safest, lowest risk of being in the headlines would be Coinbase, Gemini, and I mean those are probably the safest two in my mind in terms of risk. Do you agree with me on that?
Yeah, absolutely. So I would just echo your opinion really that with Coinbase and Gemini, you can't get more sort of lower risk than that, simply because they're regulated, they're listed, they've got billions of dollars at their disposal, and probably like armies of lawyers that will that will ensure the continuity of business, to put it kindly. So yeah, I think my opinion on what makes for a safe exchange is really one that's well capitalized, one that has, through its track record and in terms of its historical behavior, has shown itself to be one that's not looking to make a quick flip or a quick profit, but rather one that sort of sticks with the traders. The reason I love FTX is simply because they sort of tick all those boxes. And I think in the recent sell-off, for example, on the 19th of May, when we had like Bitcoin crash something like 40-50% or something, like they were probably the only exchange really that stayed online throughout the entire thing. Most of the other major exchanges had experienced quite significant downtime during what was a very, very crucial and critical period of high volatility and high volume. So and furthermore, I think they had this issue where like a couple of people lost money because of the sort of the sort of liquidation policies. There's one in particular called ADL, which I mean we won't get into, but essentially what the founder then did was he came out and he said, look, for anyone that was ADL, and if you made money from that position, because we closed you out and we stopped you out, and the market then proceeded to sort of move around, and therefore you actually didn't lose as much, or you made money because of our forcible decision, you keep what you made. And if you lost money because we stopped you out of a position and it continued moving, then hey, here's your money back. So I've not seen anyone else do that, because a couple of years ago there was a very similar issue with an exchange called OKX, and this is completely public knowledge. So I'm not trying to I'm not trying to cast shade on any particular exchange, but this is very public knowledge. OKX, ADL, a couple of people, and it was due to what I believe was an oversight on their risk management policies. They allowed one massive trader to accumulate such a huge position that when he got liquidated, he went into negative equity. And so because they couldn't make up for the shortfall, they took money from everybody else. That's not right. With FTX, they said, look, it's our fault. we're good for it. So yeah, I'm sticking with with FTX. I've got nothing to show. I've got no referral code to share with anyone. I just loved it. I just love the platform. So for me, I definitely would stick with FTX.
Yeah, and I think there's actually two issues that Vivek articulated. One is safe. The other one that hasn't been brought up that I will bring up is one that has volume that is real. So I've asked the team to. I'm not allowed to post stuff here, but I've asked the team to make a comment that has a link. But there is a beautiful report. If you Google, the people on the channel here, if they Google, I'll just type the text in the comments here. Instructing people how to Google Bitwise ETF application March 2019. The first result is a beautiful document that goes through all the exchanges that have real volume versus all the other exchange. So that's, oh, there we go. We've just posted the link. So that's a great thing to look for if you're interested. FTX is not on here because it was not a very big exchange at the time that this information was compiled. So, so Charles, I want to ask you now a little bit about your work at Basis Capital. So you're the Chief Investment Officer at Basis Capital. You work with clients on a day-to-day basis. Talk us through, I mean, what is Basis Capital and what is it that you're helping your clients with?
Sure. So as we mentioned, earlier in the call, I basically focus full time on basis trading, or basically this spot futures arbitrage niche, really. And so Basis Capital was really just set up as a sort of advisory to institutional, corporate, family office clients who perhaps are looking at the crypto space and going, oh, that's pretty interesting. More and more people, or more of my sort of downline clients are asking me about crypto, but I just can't feel comfortable putting their money at risk, and because that's exactly how I started my journey in crypto. Like, I completely get it, and so I thought it would be a good idea to offer these sort of advisory services on how to set up their own trading strategies and so on. And so yeah, we basically just try to help institutional investors and corporate investors get involved in crypto at the sort of lowest risk possible. And for me, that trade is the spot futures arbitrage, or what we refer to as basis trading.
Got it.
Sorry, I think that was a question from Boris. Did you want to take that?
Sure, happy to take that. So Boris, all the exchanges do this. So the question from Boris is, FTX trades on their platform like Binance and many other exchanges. Are you comfortable trading against them? Well, most exchanges, their market making teams, and I'll just say that this is an assumption. I don't know exactly how FTX does it, but the internal market making team on most exchanges, their objective is just to break even. They just want to make $0. They want to lose zero. They want to make zero. And the reason that they do that is because they want their exchange to have a very high degree of liquidity. So you're right, Boris, you could be on the opposing side. On an exchange that has real volume, the objective of an internal market making team would be to maybe they make a little bit of money on the maker side and then they put it back on the taker side, or vice versa. So that what that means is that any profit they make, they basically redistribute out. Now, there are some other exchanges, and you can, for the folks who are interested in this, this is what I was talking about, the link that we've just posted, who do not have real trading volume, who want to appear that they have real trading volume. And those guys, the market making teams, are absolutely out there to screw you as the customer. And this, unfortunately, is a part of crypto. So I think we need to make decisions about where we trade. FTX, I've known the team at FTX, Sam and Constance. I've been to their office many times, know them very well. I'm 100% confident trading with FTX. To Vivek's question, Coinbase may be the mecca of the most conservative, lowest risk exchange. Doesn't work for me personally. But to answer your question, Boris, I'm very comfortable with trading on an exchange, they all have an internal market making team. So as long as the objective is just to add volume and liquidity, then it's fine for me. Sorry, just catching up on questions. So let's just see if we have any other questions.
So, I mean, Hayden, do you want to perhaps wrap up by telling us a little bit about Alpha Impact?
Sure, no problem. So, so what we'll do, just as a bit of a primer for what's coming next, I'll answer this question. We're then going to just go to the floor. So Charles and I are going to stop dominating the conversation, and we're going to have we want to have a conversation with you guys, with the audience. So that's going to last us right through until about 7 o'clock. So we'll be on the call right until 7. And so I'll go through that answer to that question you asked me now, Charles. So Alpha Impact. So let me talk about my journey in crypto. I started working in crypto 4 years ago. I was looking for a source of information, and you mentioned Twitter. I went on Twitter. There's all kinds of people saying all kinds of different things. One person says crypto is going up. One person says it's going down. One person says buy this. One person says sell this. It's very hard to know where to actually get your information from. And so what did I do next? I went to YouTube. Same thing. I thought, geez, at least if people are posting videos, there's going to be some consistency. No, all different. Then I went to TradingView. TradingView is a beautiful website that we use to, have charts and stuff like that. Thinking that if people were sharing technical analysis, that they would, they'd be forced to be reasonable. But no, there's all this divergent information, and you have no way of knowing if people are actually doing what they say they're doing. So, you alluded to this earlier, Charles. There's a lot of people on YouTube who say, go buy this coin. This coin's the best thing ever. It's going to be the new Bitcoin. And they're actually involved in that project. So there's a lack of trust. At the same time, I think I was really looking for a place that was that I could find that trust. And so learning about crypto is very hard for a lot of people. And so what Austin, my co-founder, and I are building, Alpha Impact, it's a social media network for crypto traders. And the part that I think makes it very interesting is, unlike other social media networks that just allow you to share information, we actually allow our customers to copy the top traders. And so the people who are on our platform, these thought leaders, will be linking their exchange accounts directly to our platform. And so what that means, if I'm following you, Charles, and I see what you're saying, if you say, I think Ethereum is the best thing ever, and I can see you've just sold all your Ethereum, then I'll know, actually, this is not a good thing to pay attention to. You're maybe not the right one for me. Of course, you would never do that, but the idea for us is that it's a transparent way to learn about crypto trading. We have a simulation account we're going to be offering. We're doing educational content for the new person who's maybe not ready to jump into crypto yet. They just want to figure it out. So it's a place where those people can learn about cryptocurrency. And when they're ready to actually find a top trader to follow, we've got a whole lot of top traders that they can seamlessly follow. And so the way we do that is that we're not an exchange. We're just a plugin to customers who have their own exchange account. And so it's quite exciting for us because we're actually building something to solve a problem that we faced when we came into crypto. So that's what Alpha Impact is. We went through the Antler program. We have 10 people on the team. Some of us socially distanced in the office. Not required to wear a mask when you're on camera, by the way. So we're growing the team, and we're really happy with the support from Antler and the community so far. So that's our journey so far. And so what I'll do is we'll close off the Hayden and Charles portion now, and we'll go to the open mic section of the evening. So let me just type open mic session. Ask any questions you would like. Okay, networking session has started. So officially, so we have a question from John. Can you explain token economics of impact? Yeah, that's a great question. So the impact token that we've created is used for payments in our platform. What that means is that customers who join us will have the ability to pay we charge a transaction fee for these trades. So when customers copy a top trader, we charge a fee. And that fee, if you pay an impact, is lower. So customers pay our fee in the token. The traders that we're working with, we share the fee with them because we want to incentivize them for sharing not only what they're doing as a trader, but why. And it feels a lot like Twitter. So we want to incentivize the trader to connect, but also to share their strategy and their thinking and their thesis. So we share that reward with the trader, and the trader receives a portion of those tokens as well. So it's a payments, really a micro payments system for a website. So that's how the Impact token works. Our token's available on Uniswap. So it's quite exciting, and we've just been, we're really happy with the progress so far. So let's see if we have other questions. Charles, I'd like to find a question for you.
I think we've answered most of them. No.
Oh, there was one from Ethan. This is for Hayden and Charles. There was actually a few from Ethan here. So Charles, purely trade arbitrage, any discretionary or positional trading? That was 1A. And 1B was, what about cryptocurrencies do you believe in that would render you to invest in it? So I think that's asking like, which cryptocurrencies do you believe in? So there's two questions there for you, Charles.
Okay, so I'd say, yeah, 99% of what I do is just pure arbitrage trading, and then like once in a while when I've got a hunch or I feel really strongly about something, which I think we started off this call discussing like how we were positioned and how like I'm short this market, and just because I like when I see 14 green daily candles in a row, I'm like, come on, like we're overdue a pullback. And so I'm only human. I like to gamble. So I would say like once in a while I might take a discretionary position, but it's completely separate from what I do day to day, right? Like my basis trading portfolio, that's my full-time job, and then I take a punt once in a while with the money that I make for free on using basis trading. And if I'm right, great. If I'm wrong, tough luck. Try again next time. And so that's basically what I do.
Okay. I want to just make it a little bit interesting for our audience. We want to, one of the great things with crypto is micro incentives. So we'd like to offer a micro incentive of $50 worth of our impact token to the best question. So we'll start at John Nugi's question 648. Can you explain that? That's the first one. Technically, John, it came just before the networking session started. So we will say $50 worth of impact. We'll just say $50 worth of crypto for the best question received in let's just say in the next 3 minutes. So that gives us 3 minutes to receive questions and 5 minutes to answer. So we have to, it wouldn't be a crypto event if we didn't have some kind of a prize of some sort. So we've got a comment here. Nice curtains, Charles. I mean, they actually do look pretty nice now that I think about it. This is the sign of a successful man, a guy who has nice curtains. So you've hit a level, I just have a banner behind me. There's no curtains at all. And in fact, my curtains that I do have are not as atas as yours. So
did you want to answer that question about which currency you believe in? I think you mentioned that one from
Sure. Well, I think the impact cryptocurrency is fantastic, and it's going to be. I mean, we haven't actually launched a platform yet, so I tend to think that if there's a platform that requires tokens to use and the platform hasn't launched yet, it might be a good time to buy. But let's exclude that one because I'm obviously biased because I'm the CEO. Look, I think Ethereum and Bitcoin are very safe options. I think Ethereum probably will outperform Bitcoin in the kind of short run, 1 to 2 month time frame. And Ethereum is changing the way that it operates. The amount of supply of Ethereum will be drastically reduced. So what we've tended to see in other currencies that have this kind of decreasing supply, Ethereum still is increasing, but decreasing supply over time is that the price goes up. So I'm pretty focused on Bitcoin and Ethereum. I'm believing very strongly in those. So you have 2 minutes left to get your questions in, guys. Alvin Wong, for novice investors who are just getting their feet wet, what type of features would appeal to this segment other than low pricing and UX? I guess it has to, I mean, Charles, is this, my interpretation of this question is that Alvin is asking if, the features of a good crypto trading platform. Do you agree with me on that? Have I interpreted that? Or maybe Alvin, if you want to correct or update us.
Yeah, for novice investors who are just getting their feet wet. Yeah, I mean, I would say I'm still a novice investor, really, because I look. It's not like I've been trading, like from day one. But yeah, like I just speaking from my own personal experience. The reason I like FTX is because the layout of the whole trading setup and the ease of integrating with the exchange from an API backend. It's just it's pretty faultless. I can't find anything wrong with it, and so yeah, I'd say fees are definitely the most important thing. Unless you're just thinking of buying and holding it for 5 years, fees definitely play a part, especially when you're doing something like arbitrage trading. So those to me would really just be like the two main features. I think perhaps like the third one, which not many people think about, because it doesn't really affect you until it affects you, is just like reputation. Like I've dealt with exchanges before where I put $10,000 in just to test it out, and like when I made some money, I wasn't able to take it out, or not very easily, at least.
Yeah.
And I mean, I'm not going to name names, but yeah, like there are some pretty dodgy ones out there. And yeah, like I had to go through a lot of shit, with customer service and so on, in order to get my sort of $15,000 back or something.
Yeah.
And you just never want to go through that, because like your heart just sinks when you when you see that sort of pop-up screen and you key in your 2FA and everything looks legit. But then like you hit all the buttons, you do everything right, and then it tells you transaction failed, and you're like, oh crap, this could be a scam.
Yeah. So I've got a couple more questions I want to get through. I think we're going to run out of time. So let's go to Michael's question. So Charles, do you feel comfortable answering? Would you be willing to share the compound annual growth rate achieved by your strategy? And what do you consider to be a sustainable compound annual growth rate going forward?
Oh, wow.
This might be the last question, by the way. And
okay,
if it's not this, we can go to something else, Charles. You can let me know.
Sure. To be honest, I don't think I've actually done the sums exactly, just because the way I trade, I have many different sub-accounts within my sort of FTX main account. And the reason I do that is because I want to be able to sort of see which strategies are working better than others, and also just to be able to isolate risk as well, so that if one blows up, it doesn't sort of cascade and affect the others. But I think the sort of blended rate would be quite variable. So I mean, if you're talking about before May 19th, before we had this huge crash in crypto, from say January up until about May, was probably making in excess of 100% per annum. So quite easily, because I do remember just being able to look at the sort of month end number and seeing that it was about 10% higher than where I started the month. Going forward, like just where it is today, I would say we're probably doing about 30% per annum, which is, it's a far cry away from where it used to be. But I'm in this for the long term, and I do believe that it will bounce back. As with anything, it's all sentiment driven. So obviously, the arbitrage trades do a little bit better when the market's bullish in general. But overall, yeah, I would say that longer term, I would expect the return on my strategy to sort of stabilize at around 40% per annum, 50% per annum, thereabouts. It's very hard to predict, and I would never try to. But as far as my strategy goes, I'm quite happy with how it's performed, simply because like I go to sleep very well, like every night. Like I remember when I used to try and punt on like forex or try to take directional trades. Like when I went to sleep, I would wake up like 3 hours later and just check the charts again, and just be like my heart would just be pumping all the time. With the arbitrage trade, like I know I'm delta neutral, and I'm perfectly squared at all times, and so like I sleep very well, and I think for me, especially for someone of my age at least, I value my sleep. So yeah.
Well, you're not that old, Charles. I know how.
Oh yeah.
I know how old you are, and you're in fact not that old. So I want to make a quick admin announcement. So we're going to be. Are you okay to stay on for 5 minutes, Charles, until 7:05?
Yeah, sure, absolutely.
Okay. So I've asked our team to share, because we're not going to have time to get through all these, and it looks like there's some great conversations here. So we're going to be sharing both my LinkedIn profile and Charles's LinkedIn profile. If anyone wants to talk about any of this stuff in a kind of more, even about curtains, no, I'm joking. But if anyone wants to talk about anything on a kind of one-to-one basis, we'll share, or I've asked our marketing team who are hosting this call to share our LinkedIn profiles on there. So that's going to be up there. You're welcome to share with us or contact us directly. So let's see here. Oh, here's a question, Charles, from Maisie. And by the way, Vin, I'm looking at you for the next question, possibly the last. How did you set up the algo trading for your arbitrage strategy? Is that specific to FTX?
It's not specific to FTX. I mean, I do dabble a little bit on Binance as well, but for reasons already discussed, I just prefer FTX. I mean, look, what can I say? I'm a Sam Bankman-Fried fanboy. Yeah.
Aren't we all? Aren't we all?
Yeah, but I haven't got any merch from him yet, so I don't know.
Oh well.
If you're
Gotta
listening,
go to the
Sam,
office. Gotta go to Hong Kong. But yeah, if anyone from FTX is watching, we're running out of FTX swag. Charles has never got any. We're
what's up with
promoting your brand to our customers. So
yeah. So let's see. The second part of the question as well, right? Like how do I set up the algo trading? So yeah, I mean, I just basically taught myself to basically program this command line interface. And it's not difficult. It's open source. You just need to spend like 2 weekends or something like that, reading through the documentation, understanding how it works. Try it out with a little bit of with like a small $1,000 account or something. Make a few mistakes, and yeah, like that's it really is a process of trial and error. I mean, like I think like everything else in life, if it's something new. Yeah, you just take baby steps, and eventually, like before you know it, you're cycling with no hands. That's that's sort of my analogy, really.
Yeah. And Charles, correct me if I'm wrong, but you do this professionally, right? Your operation at Basis Capital, you help clients who want to do this and set these types of configurations up. Would that be a fair thing for me to say?
Yeah. So I mean, I don't think I don't think my clients would be too happy with me revealing.
I don't think you have to say their name, but
yeah. I mean, yeah. So I've got a couple of accounts. It's not a huge operation. Look, I'll be honest. Like we only got Basis Capital up and running like a month ago or something. So it's a relatively new operation. I haven't had the opportunity to sort of brush up against like capacity constraints yet, so I still have I still have plenty of time. But yeah, like things seem to be going well. The strategy is doing what it's supposed to do. It weathered the May 19th crash perfectly. Didn't get stopped out or anything. It woke up with exactly the same amount of money that I did going into that crash, and like, look, I can't complain about that. I've got friends, I've got poker buddies who were holding bags of stuff going into the crash, and they woke up 70% poorer. Of course, it's bounced back somewhat since, but I think the way the strategy is built, it's built for people like myself, who have a relatively low risk tolerance, but are still quite keen to get a decent return on their investment in what is essentially a 0% interest world, and foreseeably into the future as well.
Yeah. So, Maisie, I'm happy to connect you with Charles. I know both of you offline, and can connect if that's of interest. So, Charles, thank you so much. I just want to quickly address one question from Vin, and then we'll dial off. So this will be the last question of the evening. Before I answer the question, I just want to let everyone know we're going to be hosting these every week. So next week, our topic is a beginner topic, and I'm sorry I had to think about who we've booked for next week. So next week, we're actually going to be we're going to be exploring the basics of crypto. So this was I would say maybe an intermediate, almost an advanced topic. We're going to be going back to basics next week. So we're going to be talking about what is crypto, how does it work, how do you get a wallet, what are the things that can go wrong, what are the risks, all the basics. So we're really excited to have you all here. So I'll just take this last question, and then I'll thank Charles, and then we'll close off the session. So this question is from Vin. For a novice investor in crypto, is it more profitable to DCA and HODL rather than trading? Well, that depends on your pain tolerance. Theoretically, if you're planning on never going to sleep and you can drink 15 cans of Red Bull every day, not see your friends, family, and loved ones, it's for sure more profitable to trade. However, assuming you actually want to have some exposure and still be able to have a normal life and see your friends and family, I think that either the DCA, which is dollar cost averaging, which is buying a fixed amount or selling a fixed amount, can be a good approach. And it effectively just gives you an average, right? So if Bitcoin goes from 30 to 40 to 50 to 60 to 70 to 80, you're effectively averaging all of those numbers, assuming you evenly buy and or sell during those times. HODLing is still a great strategy. I think it's fantastic for tokens that actually have a network and an ecosystem. So I'm looking at Bitcoin and Ethereum. There are probably a few other tokens, including the Alpha Impact token, which is available on Uniswap, that have a use case and that have an ecosystem. But I would be very careful about a lot of cryptocurrencies. So really if you are HODLing, make sure you have a very firm view on what is it exactly that is going to drive the adoption of this cryptocurrency. So so I'm sorry, guys, we had some great questions from C Commons, some non-curtain related questions. We had some other questions from some other members. So we'll really look forward to staying in touch. We've got a QR code. I think it's here. If you'd like to join our website, we have a beta that you could sign up for. And we look forward to staying in touch with you on the next event. Charles, thank you so much for joining us this evening. We know you have lots of stuff happening, so we really appreciate you making time.
Thanks, Ed.
Fantastic. Thanks, everyone. Bye.